Hey guys, how's it going? Welcome to the weekly Watch This breakdown. Hope you're all having a fantastic weekend so far. So as always, starting off with Euro Dollar. Last week we saw that kind of final breakout of that sort of daily consolidation area that we were within this weekly area of demand. So as always, bullish bias still remains because we are still within this weekly low and this weekly high. So entire time, yes, price action can do whatever it wants, but ultimately that weekly high low, in theory, can kick in at any point in time, and we can take out that high. And we're not bearish until we get a weekly close below this level. So we're starting to see that bullish reaction from this point. However, I am still viewing this low here, this weekly low, as a weak low because really it failed to do anything. Now, that doesn't mean that it has to be run, right? We could go from here. It's just for me, the probabilities are more in favor of this low being run. So at the moment, we are seeing a bit of a reaction. I have no idea how far this reaction will go. That will remain to be seen. But what is interesting is we've kind of made this perfect double bottom. Like if we had wicked it, even by just 1 pip, that would be enough for me to classify that low as being, ran, and that being a liquidity sweep, and then potentially I would have a lot more conviction that we're going to see that higher move. But the fact I think we missed it by about maybe 4 or 5 pips means we're just generating what looks to me, that kind of perfect double bottom, and I think we may see a bit of reaction, and then eventually we will sweep that. Now, whether that means we will just come down to target it and then continue that move, or whether we'll come down, sweep it, and then that will fuel the move that goes, again, remains to be seen. We'll just react rather than predicting, right? So either way, if that comes down and then we get a change of character, say on the 15-minute time frame, then boom, all systems go to then look for those potential bigger moves. We'll see how that goes. So for now, I am seeing this as some bullish momentum, but I do think it will be reasonably short-lived, and I would be very surprised if price does not come back down to sweep these in the sort of near to medium future. So that's kind of how I'm viewing the weekly time frame. Potentially we could see a decent reaction from here, but I'm not totally convinced just yet. But yeah, we are still bullish, so path of least resistance, at least from a weekly time frame, is still to the upside. Here on a daily chart, you can kind of see that double bottom low again, how we just missed it. We didn't quite come down. We do have obviously remaining demand within this wick, which is what we have reacted to, right, to kick in this move away. If we were to come lower and actually get that run of the weekly low and the run of that double bottom, I'm sure there will be a nice decent amount of demand, some nice buy orders left within this zone, right, within this wick. I really do like this daily demand zone as well because it was that run on liquidity that caused that huge bullish trend, that big break of structure. So yeah, kind of a few ways kind of looking at this is we are putting back up to the EQ of what for me is the daily range that we are within. So we are bearish on the daily. I'm looking for price to come up into this EQ, potentially somewhere around this supply zone. It's not really the cleanest of areas of supply, potentially even something within this wick here. It's not great, but really just looking for price to come in, potentially form that lower high, and then come back down, run this liquidity, and then see if we start to get that sweep then there to the upside, or of course we could literally just blast up straight through from here and then start making those higher highs and higher lows, and then we can look at those old points of supply that we have as potential reaction points for pullbacks to kick in for that overall bullish trend. So yeah, very simply just looking for bullish plays, but we're pretty much at the EQ already. So longs are not ideal to be getting long right here. So either looking for intraday pullbacks down into in towards these levels to then to look to push this higher up into supply, and then potentially look for the lower high, the daily lower high there, to run the low, and then we can look for that potential sweep on the long, or potentially this will take over. Then we wait for the pullback into the area that caused the break, right, and then so on and so forth. So yeah, let's see how that plays out this week. 4-hour chart, let's have a look at what happened the last couple of days at the end of the week. So this is kind of another tricky one where I kind of spoke about this on Wednesday about how you define your trend, right? Because really that is one big leg swing down, but in the past I have classified this kind of price movement here, right, 3 or 4 hours, a bit of a pullback, enough for me to be 4-hour structure. So I need to try and be consistent with that, because over here I was viewing that essentially as a 4-hour lower high, right, that movement down, and then when we came up and then we got that break of structure there, right, we got that flip, that for me was then saying the 4-hour had switched bullish. But of course you have to view it in the context of the wider price action, right, that we are still very heavily bearish overall if you're looking at the daily chart. So I always knew in the back of my mind that this 4-hour bullish trend at this point was likely to be short-lived, that it was more just a daily pullback, right? So you kind of view them in sort of different lights there. So this is kind of a similar situation where I am personally viewing the 4 hour as now bullish, but I'm very aware of where we are in the daily leg, that this essentially is still a bearish daily leg. We're pretty much back at the EQ almost. So I wouldn't be surprised if we suddenly got that 4 hour change of character, or potentially a 4 hour bearish trend change at any point to then look to run that week daily low, and of course the weekly low over here as well. But then what was our other main forecast is that we could just switch bullish here, right? That the daily could get that breaker structure to the upside. So that's why, I'm happy to view the 4 hours bullish here. We can look for potential reaction points here. But more so, I'd be ideally looking to see price come back down into some better pricing to look for those longs, to then trade this up into more of the premium of the daily chart. And that's where we can look for the shorts from up here, or wait and see if we do get that breaker structure. So yeah, that's as simple as it is, really. Just outline my areas of supply and demand. Obviously, back in the other week, where we had this area of 4 hour demand over here, essentially just viewing a few areas of flips here where we had that kind of first initial reaction. We had this buy to sell as well, but that got smashed through on Friday. So this is kind of the next point where we may see a bit of a pullback, where you can look for those kind of more aggressive intraday entries to potentially pay this reaction back down in towards this supply to demand flip down here. To get that right in my head for a second, it's a little bit confusing. And then we had another couple of pretty messy supply. They're not amazing, right? But from an intraday perspective, I'm more than happy to wait for price to come up into these areas. I've just got them drawn over to the left hand side, just because try and kind of like to keep my charts reasonably clean. But fuck it, let's just drag them over. So yeah, I mean, sometimes when you get price action like this as well, you can literally just take the whole thing. Or just use different time frames to try and clear it up a bit. I'd say, let's have a look at the 8 hour and see if that looks any different. Yes, nice 8 hour inside bar there, so that's pretty much all you're doing in that case. But these will kind of be the three nearest points I'll be looking at for potential reactions to play that 4 hour pullback. So I'll be looking to play the 4 hour pullback into then the longs, but with the potential that because we would be selling anywhere above this red line, right, is selling in the daily premium, that could then turn into a pro trend move. So you do have to bear that in mind. But for now, just looking for these to be reaction points until we get that 4 hour trend change, or at least a 4 hour change of character, potentially all the way up to this 4 hour zone nested within the top of daily supply, which is a really nice zone as well that took that liquidity, which I believe is actually quite a nice, let's see what the 1 hour looks like. Yeah, this nice 1 hour sort of supply zone there, up at the top, nested within that wick. So that's pretty much it from kind of that hard time frame forecast. Let's take a look at the last couple of days of the week. So we were within that kind of small bearish range, right? We came back up, tapped into the area of supply, and then it was a very, very weak reaction. So, you can use that to, or think about that yes, we are bearish. Yes, we have reacted from supply up in the premium, but where are we? We're kind of in this last sort of area of daily demand, but also in this larger zone as well, and that weekly area of demand. It's a very, very weak reaction from it, right? You can see how much price was struggling to pull back. We'd also had a change of character, right? A 4 hour change of character as we took that high. Well, actually, we did have one a little bit lower down as well, because this low got taken, right? So then that high gets taken. So that's actually your first true change of character there. And now if you had your 4 hour zone refined down to this candle, you can see that was never tapped into. And this is something that I'm kind of using more and more now on all time frames, especially the 4 hour and the 15, where I'm looking for those lower time frame confirmation entries. I'm looking for those lower time frame changes of character within these areas of interest, that I'm looking more and more often now to kind of take the zone. When you have that kind of that range created demand or supply, where you've got quite a few choppy candles, kind of finding it's quite useful to just take the high and the low of the whole range, right? So in this case, you could also do it there, right? But obviously refining it as well then works when price moves in deeper. And as soon as price comes into here, you can then have confidence that if you see the price action that you want to see in the lower time frames, to then take these entries, whilst accepting that that could be a bit of a false move, and price could then come down lower to actually mitigate the refined demand zone. But if you're always waiting for that refined demand zone, that's okay. That can be part of your plan, but you have to accept that sometimes you may then potentially miss entries that end up going after it just taps into this area of what essentially would be 8 hour demand, right? But we're just taking that whole sort of sell to buy range. So yeah. Whoops. So we reacted from there. I'll get down to the 15-minute chart in a minute, but then we essentially tapped into this demand zone, and then we absolutely smashed up through. This supply had essentially been mitigated with this move away. So in theory, there wasn't that much orders left. Price came up. There's obviously a little bit of supply left in the 4 hour wick there, where we had that sell to buy price action. So we have that kind of that wick flip zone in here, for lack of a better phrase. So this will be a nice area of potential interest to look. So so if that 4-hour high gets taken there, then for me this swing low is here. So at the moment we are playing within the 4-hour range. At least this is the way that I'm viewing the market. If you still view the 4 hours bearish as well, and that's just a pullback, that's okay, like I said, but I'm kind of viewing that as a daily leg, and this for me is the 4-hour bearish range that we are now playing within. So obviously if we do come lower than here, I will also be looking at kind of these areas, and potentially even that refined candle here that we never touched into, which will also keep an eye out on. So let's take a look at the 15-minute time frame last week. So we popped up, I believe, on Wednesday. I think we had, what news did we have? I can't even remember now. I think that was CPI news we had on the Wednesday. Anyway, kind of irrelevant, but yeah. So we continued that bullish move, right? We had a closure above that high. So then we were playing within this low and this high here as my bullish range. Now, there are a few kind of demand zones you could have been looking at. This one was really clean here, right? This is kind of where that momentum actually came in. It is a bit more of a decisional, but it's still kind of where you've got the flip and you've got the break of structure. So I definitely would have been looking at this zone. However, I believe it was mitigated about 3 a.m. during the Asian session. Yeah, we had a really nice move away there and then had that break of structure. So this zone was pretty much fully mitigated. So if you're then coming into the London session to look to trade this, sorry, I just got something in my eye. So yeah, so this would have been the first kind of area that I would have then been looking at as price was then coming down into this area around 7 a.m. I'll tell you what, yeah, actually no, we'll go through, I was going to go through the 15-minute chart all on its own, but I think if we do it at the same time as M1, it might be a little bit easier to keep track of what's going on. So we had that mitigation during Asia, right? Nice sweep of all of this liquidity here. We then tapped into this zone. We had a nice movement away. We had that internal sort of break of structure, right? That changed the character again. So we then switched bullish. And then this would have been that kind of nice, actually draw on the liquidity, sort of FU sweep M15 candle. There we go. To look for potential longs to come into with nice liquidity to target. Obviously trading against the 4-hour zone, but this is with the anticipation that potentially this move here is going to happen. After we've had that daily break of structure, we're expecting that bullish daily pullback, right? So as price first comes down into the zone, there was what I personally view as a valid entry that would have been running probably about, well, let's see. So essentially we have the movement coming in. As soon as we come in, we have this inside bar here. So let me draw it on. Right, so we have our reaction to supply. We fail to breach this low here, and then we push up. So then this becomes this inside bar, or you could take the whole wick to the low, but I think that's pretty much fine there. To refine it to there, obviously you could take the whole low as well, but even if we just draw it to there, and then let's see how that sizes up. If you took the distal, see there's plenty of room there to cover the low, even with 1.5 pips stop, and you would have peaked at 2.3 R. So very unlikely you would have moved to break even. The only way in which I would say you move to break even here is if you don't like the area that you're trading from and you just think it's quite an aggressive area. Then as soon as you kind of see kind of those multiple minor breaks of structure to the upside, then you may just want to go, okay, I've seen enough that I want to see and move to break even. But really I wouldn't advise that. I think it's better to just take the hit in this case. And yeah, it was just not a valid loss. Sorry, it was just a loss in my opinion. That was a valid trade, just not super high probability. One, because so this is the EQ of the range, you're kind of trading in the middle, which is not always the best kind of area, but kind of another reason I was looking at that's a little bit more nuanced. But let's see what's going on here. So when the M15 mitigated this zone during Asia, and then we got that kind of change of character again back to the upside, right, you essentially have this area of demand here. Right, so price has come down into the demand, it's moved up and it's failed to do its job, it's failed to go up higher. So then we have the break of the reaction, right? We have the failed reaction. Now what caused the break of that failed reaction? Well, it's any of this buy to sell range that you can take, or we also have this more refined candle, right? This bullish candle here that would have moved like that and then gone down, right? So now when price is down here and we're trying to look for that long, we're in the trade, and what happens? Price moves up, we're in profit, but then it rejects that candle here, right? And this was the buy to sell that caused this reaction here to fail. So it's kind of a little bit nuanced, and I was kind of thinking about this today about, if you kind of draw on every single kind of flip and reaction, especially when we're kind of in a reasonably choppy and range bound environment like that, it's going to get extremely confusing, and you're almost never going to be able to take any trade because you're constantly going to be sandwiched between two zones. So it's more like you can see it and you can have an understanding of why it didn't work out. But I think if you're going to always have it in your plan that there's never going to be a zone that you're going to be trading against, then it's going to be, well, you're just going to be sitting on your hands a lot more, which may actually massively improve your strike rate. But you just have to kind of define yourself what you're happy to trade against and what you're not, because it's going to be rare that you're going to find that perfect trade where there's no negative confluence against your trade. So that for me is kind of why that trade ended up not running and taking those highs, because we reacted to the supply that caused that reaction there to fail. So then we came down. Now this is where, so if I delete this zone, we then ran that low as liquidity. I mean, arguably you can also say that this is a weak low anyway, because when it comes down, when it sweeps liquidity, it kind of taps our last area of demand and goes away. It did take out this high, but really, this high is insignificant. It's just, a minor high within the range. Really, you want to see that high get taken. So arguably, that's not going to be the M15 swing low, right? Because it hasn't continued its move. So when price comes back down, then we can then potentially expect that to get run, which is what happened. So then we kind of mitigated this area of demand down here, and if we actually look within the zone and see what it was reacting to, so this move here, and then we scroll left, this was a really nice zone, because when price was coming down here, right, we essentially had this pullback right into supply over here. We had the movement down, and then this is where price came back up. Get rid of those lines. It reacted to supply, failed to put in a lower low, and then that's where we got that kind of larger change of character and started moving to the upside again. So at this point, that demand here was already mitigated, but the wick was unmitigated, so that was a pretty nice area to look at. So I would have been looking at this area here, and then also this wick down here, if I was looking to kind of refine this larger M15 zone at that point. But even if you're not doing that and you're just happy to look for positions, anywhere within the zone, it just shows here you don't need it. You just wait for the order flow to switch bullish again, right? You wait for that flip. So we had a nice little sweep of M1 liquidity here. We came down, pulled back to cause supply, moved down, we pulled back into the supply, but then when it tried to form a lower low, right, price never breached that low, it failed to do its job, and then the demand came in and caused the reaction to fail. So the reaction actually fails here. So as soon as you see that closure above that high, above that line there, that orange line, or if you want to be more aggressive and just look for a wick break, right, then at that point you can set your order anywhere below this orange line, right, anywhere in this sell to buy range, you can set your order. Or if you want even more confidence, right, you wait not only for the candle closure above the reaction, but you also wait for the M1 change of character, which is what we got here. Okay, so now this is turning into more of that kind of A+ setup, at least from an M1 price action perspective, right? This is kind of everything you want to see for an entry at that point. Purely just talking about the M1 here, not so much where we are in higher time frames. And then obviously, like I was saying, you can take anywhere within this sell to buy range, or the refine inside buy here. Even on the distal or on the EQ, you'd have been tapped in for a really tidy trade if you had got in that tight. But you can see here, even taking the distal, you can cover the low there with 1.5 pip stops. And then kind of targeting the sweep of these liquidities here, liquidity highs there would have given you just shy of 8R. So that for me was a really tidy trade. You'd have taken the loss there. There was another good setup to try and play that long position and hopefully take a decent amount of profits or some partials at that point, or look for the hedge, because at this point we kind of come up to this last area of supply that potentially could stop price from going up higher. Let's actually see if we can clean those candles up a little bit. Yeah, there we go. So a nice 30-minute inside bar there that price then reacts to. So let's go back to the 15 minutes. And then, yeah, there was another flip here. So again, you don't even have to have all those zones drawn out. You can be in the trade and just wait for kind of that order flow to change after you see the sweep of liquidity. So we get the movement in. We fail to make that higher high. We react down. We build liquidity and we come back in. And there would have been a nice, beautiful short entry back down. And then we get the standard chop that you usually see around London lows. So not a great time to really be looking for entries, especially then when you kind of need to ask yourself, well, what's really happening here with the M15? This red line here, right, is the EQ of the range. At this point, we are just chopping around that EQ, right? We are taking lows, retracing. We are taking highs, retracing. Taking a low, retracing. Taking a high, retracing, right? That is not the type of price action that's going to be conducive to kind of high probability trading. Yes, it can be traded, as you can see here. But if you are going to do it, just wait for the sweeps of liquidity of the extremes of the range, or just when price is at least near the top 25% or the bottom 75% of the range. Don't be getting lost in the middle here. This is just just asking to get chopped up, especially when you're around the London low as well. I would even say pretty much all of the last week or two. Obviously there was some nice beautiful sells from up here, but it's been pretty horrible price action. There's obviously been the nice few trades that you can find in there. I haven't been in the trenches trading this live and following this price action all week. As you guys know, I'm still not actively trading just yet, whilst I try and get this course out to you as soon as possible. So I'm doing all of this with the benefit of hindsight and going back through and kind of just back testing for myself. So it's kind of easy for me to see the higher probability trades and see how the higher time frames played out. But whenever I am trading this live and I start to notice that is what is happening on the M15 or the 4 hour, whatever, where you're seeing highs being taken and lows being taken and no real follow through, that's generally where just take a step back and just wait until price action clears itself up and take a few days off, do something else, back test, look at other pairs, right? But if you kind of try and keep forcing it, you're gonna really start to have a hard time. But yeah, anyway, so we have a nice sweep of that London low liquidity, kind of as volume would start to be picking up towards that kind of 1 p.m. sort of New York open time. We sweep that M15 low as well. We don't quite come down into that wick, which probably would have been an area I definitely would have wanted to see that refined demand being held into, but this is really nice sort of M1 price action. So, if you were looking at this is potentially setting up as a nice flip because we have supply. We move in, we react, and then this would be the demand that I would be looking at. But I would not advise setting a limit order here, and I'm not just saying that because I have the benefit of hindsight that it lost. It's because what happened, well, price went all the way up, it took the high, right? And then for it to come back to this demand, what does that have to do? It has to switch bearish again, right? Because that would be your high and your low, and it's had to break that low and come back down to your zone. Now, of course, these can work out, especially because this can just be, a sweep of liquidity to come back down to mitigate this zone and go off, especially as this is a really nice zone in terms of the M1 price action, right? It's an FU sort of zone, so it is a nice level, but when the M1 kind of has to switch bearish, it's coming a long way back. I would rather play the reaction from this level, whether you want to jump down to 15 seconds or just wait for an M1 reaction. That would save you definitely an unnecessary loss there. So we start to get that now sort of got that bearish change of character in the M15, right? Taking these lows, the highs are being respected. We come down again. We now mitigate whatever's in this wick, right? We're still above the low, and we have a nice bullish movement up. But there's again no real follow through. So you could have been looking at this zone. What looks to be quite a nice M1 demand zone, right? But just wait for that confirmation entry because we've had to come a long way down. We've had that M1 change of character to come all the way back. It is a valid, sort of risk entry, but I would just wait for that reaction. We don't get any flip, right? We come up into supply holds, and then we continue down again. So now at this point, right, we try to breach the M15 low. We try to switch bearish. We pretty much fail to do so and just about close back up above. Now this is where the M15 is your friend, right? Just waiting for it to clean itself up and show you that change of character. We just look at the M15 price action. What happens? We have supply. Price sweeps liquidity. It fails to switch bearish. We come into that supply. We come down. We fail to make a lower low, right? We fail to take out this low. And then we take out that failed reaction and we get an M15 change of character, and then that's why old supply just becomes a reaction point for the pullback, and this ends up being as low as price then goes before we then eventually get that 4 hour bullish trend change. Now you don't have to wait for the M15 change of character here or the M15 flip to occur. You can anticipate that before that happens. So obviously at this point you see price going up into that supply zone, and then you're aware that potentially this is where the M15 could switch bullish again or get that change of character because you've seen that it's failed to breach that low. Buyers have stepped in, and also we are reacting off this 4 hour sell to buy range, right? So if you kind of want to be a bit more aggressive and anticipate this flip and change of character before it happens, then of course you're more than valid to look for the M1 entry within here before we get that change of character over here. But it's just kind of the same setup as what I was saying for all of these setups over here of it's more than valid to take the limit order on this M1 flip zone down here, but personally I would rather play the reaction at point, especially as we're coming off supply. So I want to make sure that we're getting that confirmation. Now for me it's not really a valid M1 flip. Why? Because we do have that nice let me draw on supply range here, right? It creates supply, but when price comes into it, there's not really a reaction for me on the M1. it just smashes up straight through. We do get that nice exchange of character, and obviously comes back down and goes off. But in this area, there isn't really a valid entry, and I couldn't find one on the 15 or 30 seconds either. So the only way I think it's personally valid, or at least for my plan, in terms of that flip sort of confirmation entry, is on the 5 seconds, and even then it's very, very hard to spot. So this is something that would be extremely hard to spot in a live price action, but I am studying this more and more to try and see how the 5 second can kind of play out. So what's happened, right? We've had this whole area of supply. So if you're looking at this on the 5 second as it's forming, you have to ask yourself, as soon as you see the reaction from this range, that is where the demand's going to be. So where is the reaction? Price moves in, it reacts, and then it goes up, right? So that is your area of demand. That's sort of sell to buy, and that would be your entry there. So you could either set your limit on here, or maybe you want even more confirmation to make sure that this one is going to hold and that one not going to come down lower to potentially mitigate the extreme down here. Well, then what happens? Well, we're bearish. We create supply, right? We move down, we react, and then we get that 5 second change of character. So as soon as you see that bullish candle here, you can enter at market, or you wait a few seconds and then smash buy as it comes back down into mitigate the range, and then we're off, okay? Or again, just play the series of mitigations, we get the breaker structure back into mitigate this range, and then you'd be off again. So it's kind of how you can use the 5 second to your advantage, just making sure that bullish order flow is staying intact, right? And then in again, and there's a few kind of ways you can get into there, but yeah, I don't necessarily want to be advocating and jumping all over the 5 second chart, but that's kind of really the only entry that I could see when I went back and studied that. And yeah, there's kind of a few flips up here as well, but it gets a little bit messy at that point. So this is kind of where it's just a little bit easier if you wait for that M15 change of character again. But there's your M1 inside bar. We react, we push up. So I would have been looking at a entry anywhere within that range there, but it actually does fail, and we do come lower for this zone here. But for me, this is where it gets a little bit kind of tricky again. But this is kind of the beauty of, if you do take these zones, let's see how big 2 pips would have been. Kind of take the EQ, and you kind of see these zones here. You can still have plenty of stop protection. Even if you took the distal, you may have just survived on that trade, depending on your fill and the spreads. But yeah, the reason why that zone failed and came lower, arguably, is because, let me draw this one properly so we don't get confused. These buy to sell wicks, right? We had that reaction there, and then it came in to take out this inside bar here. But I probably would have seen that as that whole sell to buy range has already been mitigated with that wick there, so I wouldn't really personally be looking here. And the reason why this zone was valid is because, let's see, we have these wicks here, right? This area of demand, and the reason why that area is valid because that's where this area of supply ended up failing, right? We reacted and we pushed up, we came in, reacted. It's just following the series of mitigations. But yeah, you don't have to kind of be following all of them, because there's going to be entries everywhere, and that's why I think just see the ones that are obvious, that kind of make most sense to you, and then you just got to play the probabilities, and hopefully you would have survived that mess there. Or again, playing the reaction, and then we come back in, right? That inside bar reacts to that supply there, we push up, and it would have been obviously a little bit cleaner in 15 seconds, but there's another entry. Now, all of that said, it did play out, but this whole area is not a great area to be buying at. If you're going to try and play that aggressive move, i.e. playing against the 15-minute supply, right? Because we could have easily just continued down, and we're still bearish until we get this kind of change of character. Well, the internal structure is bearish. Obviously, the swing structure, the 15-minute swing structure is still bullish because we never took out the swing low. But yeah, if you do want to kind of play that, then really kind of want to be getting in at this point where you're much better priced, rather than kind of already at the EQ of the leg and you're kind of messing around in the middle of this larger range at this point, right? Yeah, ended up playing out, but yeah, the M15 flip then, and then that change of character, we came down in and around the Asian session. So yeah, obviously not going to be entering trades right around spread hours, but what's interesting is you look at the price action, we came back into it, right? We failed to make that higher high, but then came down, took out the low, and then we got that change of character during the Asian session. So then at that point, when you're coming into London, and you can kind of see this range, we've left nice, almost perfect triple top there to be swept, and then kind of looking for those longs, with the understanding that this last area of demand should hold if we are going to go, or potentially something in that wick there. So let's have a look and see. So at this point, right, coming into Friday, you can see if you're just looking at all of this to the left, I think it's more than valid to go, do you know what, I'm not going to trade any of this until we get a break in either direction. that's absolutely fine. But if you are looking to trade it, this is where you want to be staying to the extremes again. So if you kind of mark out the range within the range, so what I mean by that is this is the 15-minute range we're playing in, the actual true swing range between this low here and this high here. But if you kind of look at the new range that we're within, the kind of internal range, for lack of a better phrase, right, this range here, I can go, if I'm going to look for buys, it must be below this red line at a minimum, okay? So you want to see price come down, and then what that would have potentially saved you from is any early losses before price comes down. So potentially if you were looking at this M15 demand zone and looking for M1 flip entries within here, you're going to avoid taking any losses until we come down. And then what happens, we get nice sweep of liquidity, but more importantly we get that aggressive move in and the aggressive move out, really showing you the big sort of buy orders have been filled. We have our area of supply here, right? We react, that's when the demand comes in to cause the reaction to fail, and then we end up getting a beautiful entry there. But let me draw this entry on properly. So there's your refined, okay, I don't know why that didn't work. There we go, there's your refined supply. And if you took the whole range, right, rather than the refined candle, just want to show you as well, right, and then you got in on the distal, because that's definitely more than valid, or at least it is for me, whether you want to take the range or the refined candle. And this is just a perfect example of not, like, see, it doesn't even go anywhere near even 3R, so you definitely should not have taken any partials or removed risk at that point, and then you don't end up taking a unnecessary break even, and then you end up catching the base of that 4-hour trend change there. So yeah, I mean, there's a few more flips along the way, but really you don't want to be buying in a premium. Even this isn't ideal because you're back in the premium of the range at that point, but obviously what you're trying to play is kind of that initial sweep there. So not the most amazing trades in the world or great price action, but there's always trades there, there's always opportunity, but it's just a lot harder to trade when price action is like this. So it's kind of just that August choppy sort of range. But finally on Friday we started to initiate out, clear a lot of momentum. Now when you do see this sort of momentum and going, you can especially with euro dollar, you can get away with kind of taking a more aggressive sort of day trading / scalping positions where you just keep playing the momentum, because obviously when we get a break of structure, what do we expect? We expect a pullback, but that pullback cannot occur sometimes for quite a while, right? And we can just keep shooting up. Now you have to kind of recognize when to do this and when not to do this. So when you see a lot of momentum like this really starting to go, it's a lot riskier, but you potentially could do that. So we had this nice kind of last area of 15-minute supply within the 4-hour supply zone. Now if this is going to hold, then that is where you would expect that 4-hour supply to hold and we stay bearish. But the minute that you see price react and then kind of start to spike up through, right, then maybe you can, this is what I'm saying, be aggressive and start to anticipate that we are going to break structure to the upside. So it is very aggressive, I will keep saying that, but the entries are there. So there was kind of that early initial one there, but that was before the M15 supply had really failed. So it's not until we kind of get that flip here just after New York Open where I would have had a bit more confidence to take that, especially then when we actually close on the 15-minute above that 4-hour high, and then we kind of come back into this area of demand. We push up, react to the supply range, we push down, right, and then the reaction fails. It fails to take out this low, and we push up, and then we come back in and mitigate it there. So there's a few kind of cheeky entries there. That one would have been very aggressive for me, but you're just kind of following the momentum at that point. And then that flip there had a little bit more going for it in my opinion, because the M15 supply failed, and obviously then you can see price has gone up, and then you would have been in a pretty beautiful trade. So that wraps up the price action for Thursday and Friday. I've kind of gone over the forecast already for the week ahead. I'm viewing the 4 hours bullish, so I do favour longs to the upside, but we're already approaching that daily premium sort of prices, so I will be looking for shorts from these reaction points, but ideally all the way up here, and then looking for longs more ideally from down below here. So let's mark out the new 4-hour EQ that we have. Just make sure that's got the right settings on, hours and minutes. Yep. So let's see what we've got here. Let's clean this up a little bit. So this would obviously be the EQ. So ideally we would want to be buying anywhere within this range here, and we may come down, and that's quite a clean push this. There are some M15 demand zones on the way up. We have had that M15 change of character as well, so potentially we may start to break down from here on Monday, but I would prefer to kind of see that nice sweep of that high, tap into at least some 4-hour levels, right? Some nice 15 levels as well, and then kind of get that change of character and then go. That would kind of give me a little bit more conviction to want to look for shorts, but I guess this is a pretty decent level on the M15 that we are reacting off, right? This sell to buy here, so we have had that change of character, so it wouldn't be more than valid to look from shorts from here as well if you wanted to play that pullback there. But obviously, yeah, much higher probability if you kind of wait for that Asian session liquidity to build and then see that sweep of the larger highs here, get that change of character, and then we can play that pullback. Obviously have areas of demand here that may hold. This one's a pretty clean push, and then we have that flip zone here if we do push a little bit lower now. Yeah, so we just have to reassess how price starts to form. I'm not going to draw on every single zone, but essentially just, you can refine them as price starts to come down, and even then you don't have to really care which one's going to hold. You just wait for that change of character and then start to trade it back up to the upside, right? That's as simple as you guys need to keep it. But hopefully with this momentum and this clean push now, we're hopefully going to see a little bit cleaner price action and not too many horrible ranges that we have here like that. So that's euro dollar. Pound dollar, just gonna kind of briefly go over higher time frames. Actually, there were a couple of trades I did want to look at and talk a little bit more about on the 15-minute when we get down to that, but let's see what's going on the weekly chart. So yeah, we've had that run of that weekly low, that weekly low, but horrible price action, kind of this August summer price action, not really going anywhere from a higher time frame perspective. We are bullish overall, but we are coming off supply, so yeah, I won't hold my breath kind of for what way long term this wants to go just yet. Daily chart's a little bit clearer, at least for me, because yeah, we've been within this bullish range the entire time. We've now come down and mitigated that last area of demand that now must hold if we are going to continue. And what I really like is how sharp and strong that reaction has been. Nice in, nice strong mitigation out. For me, that is a daily break of structure, so I do view the daily as bullish, but I know that GU likes to be a little bit tricky, and potentially that could be the swing low, that could be the swing high, that could be one push down. This could just be inducement for potentially the next run to then go. But yeah, I'm personally just keeping it simple and trying to be consistent, and that for me is a daily break of structure. This would be the EQ. We haven't quite made it back to there. Of course, we don't have to, but I would have liked to have seen that. And then seeing kind of that little mini daily or 4 hour change of character to then look for that next move there to the upside with the potential we may run these highs if we are going to see that bullish move. We have essentially reacted off of, right, so we had this supply range here, right, this buy to sell, prices come in, and I liked this inside bar to be the flip where price could come back in, but arguably you can see here it was mitigated with this wick. And also, if you refine this daily supply range here to this candle, that's where actually the kind of true flip may have occurred, where you see the reaction, the push down, and then that's what led to the daily break of structure. So anywhere within this wick, and that's what we're reacting to at the moment, but it's a lot clearer on the 4 hour chart, which we'll look into. So potentially, especially with that nice daily retrace, potentially the daily high low is now in, and we may be seeing that next leg up here to the upside. So if we look at the 4 hour chart, that's that inside bar, which is a lot clearer for where that flip zone occurred. You can clearly see it here on the 4 hour chart. Now, this is kind of similar to EU, where it's really going to depend on how you define your swing points. Because arguably that's one push down, that's one 4 hour leg push up, that's the next 4 hour leg down, that's the next 4 hour pullback, that's the leg down here, and then arguably then we don't get the break of structure into here. But for me, I'm viewing that as daily structure, but if you view that as your 4 hour structure, that's more than okay as well. Kind of just then have to be aware in the back of your head that when you see price action like this and breaks of that it's kind of just your internal structure that's breaking, and be aware that that may be a signal that we are getting that deeper pullback at that point, right? But for me, I view that as enough as structure. So once we got that closure below here on the 10th, that for me was the 4 hour then switching bearish. So we were then within this range here. Excuse me, we had a bit of a pullback there, and then we broke this low here on Friday. So now for me personally, we are playing within this 4 hour range here. So kind of one of those tricky ones where the daily's bullish for me. We've almost come back to the EQ, but more importantly, we've mitigated that real nice flip zone that actually led to that daily break of structure. We've kind of fallen quite correctively. We're playing within a pretty tight bearish range here in the 4 hour chart now. So if it is to remain bearish, and if we are going to come lower into those discount prices, then this high for me needs to hold, right? There's obviously going to be supply within here. There's not a super clean candle, but I am viewing that as a general area of 4 hour supply. I just haven't quite drawn it on yet, just to keep the charts clear and simple. And I will be looking to see if that lower high is going to form and if we are going to run that weak low. But we have had that kind of nice change of character, right? Because we took that low and then we took the high here. So we have had a 4 hour change of character. So you can also be viewing this potential candle as well as that demand point if you are potentially viewing this as price coming back in, leaving that for liquidity, right? A failed reaction that may come in from here, and we may see that 4 hour switch bullish again, back in line. Because if we get this, right, if we get the break of that high on the 4 hour chart, for me, that will be confirming that we now have the daily high low, and then it's all systems go to target that high at a minimum. However, if we fail to take out this 4 hour high, then I would view that as a weak low, and we're going to get a deeper daily pullback, and then we can start looking at these areas of demand down here, so on and so forth. Okay, so that's pretty much how I'm viewing GU for the week ahead. It's not super clear price action, kind of just one of those ones we'll have to see which way it goes, be willing to take the short and be willing to take the longs, and just see which way it wants to break out. So yeah, just a couple kind of trades I wanted to talk about on the 15-minute, but we actually do need to cover the 4 hour first before we do. So when the 4 hour was bullish and we were within this low and this high, this kind of wick, right, is the last area of demand somewhere within this wick that needs to hold. So we can see where kind of that real reaction occurs from this wick, where we get that buying pressure here. So price tries to move up, and then what happens? It takes out the reaction, right? What's the candle that took out the reaction to make it switch bearish and also spike the actual low? It was this buy to sell, right? So we have this area of supply here. So that was a decent area to look for shorts to then catch this next leg down here. So if we take a look at the 15-minute chart for that, as price was coming back up into this large area of 4 hour supply, we had kind of two real areas that on the 15-minute that price could have reacted to, which we saw two reactions, but obviously the extreme ended up holding in this case. So for me, we had this area of supply, but it was then mitigated with this wick, right? So that's been mitigated. And then we had this area of supply, right, this bullish candle, but then that was mitigated with this wick. So this for me then becomes pretty much the extreme. And then we also had this buy to sell here, where the candle had been mitigated here, but the wick was still unmitigated. And we had some nice structural liquidity sitting in front of it. So this is your two kind of areas which you can set alerts to then look for those shorts. So let's see how you could have traded those if we scroll back across. So got your two 15-minute areas. Now you don't have to do this, but you can go in there and try and refine them to the M1. So here we have a beautiful M1 candle there. And then on here, look, there's that M1 inside bar. So let's quickly draw these across actually. M1. Where is it? Extend right, that's what we wanted. And then let's do the same for this one. So, oops. So I would be a bit wary of that wick, but for me, that's kind of where that supply then starts to kick in. So then if we scroll across, see what price action that we get when we get up to it. So this first one, there wasn't really a super clean entry. The 15-second was a lot better on this one. Let's have a look. So price comes into our level, we have our area of demand, price reacts, the reaction fails, so then this becomes our supply zone, and then obviously enter anywhere within that supply zone, and you are off on a beautiful trade, but obviously trying to hold that and swing that, so that trade would have ended up being a break even. Pretty much no matter how you manage that, you would have been running easily over 5R, and then are we on the M1? Yeah, we are. So let me delete that zone now, and then this would be your extreme, right? So this has to hold. So yeah, if you are going to take risk entries, for me this is definitely the area in which you want to do that. Otherwise you can see, right, price reacted to demand, it tried to make that higher high, right, and then it failed. So this then becomes your flip zone anywhere within this range here, but really, it's quite, well, let's see how many pips that is actually. I haven't drawn that straight, but who cares? It's about 4 pips, so you probably either want to take the EQ or refine it to that candle, and then yeah, you would have been an absolute monstrous trade. Let's draw that on. All right, even if you just took 4 pips, right, to cover the high, let's be a bit more conservative, and then let's see, targeting that next low. Boom, you're in a 20R trade there, and you could have easily taken that with a risk entry, probably with even better risk to reward there. Obviously, just got to be patient for a few days. What's that? 11th of August at 6. Yeah, about 24 hours there, and you have made 20R, which is not a bad return at all. Other than waiting through this chop, pretty easy to manage that. Yeah, so that was kind of the two trades that I noticed from there. which were pretty decent to look at. And then we came into this 4 hour demand zone, obviously, and then we were looking for that 15-minute change of character, looking for potential entries, but this is around kind of the edge of session. Don't really want to be looking for entries there. Supply ends up holding. We then come down and we take that low, and then we come up into supply, right? We get that reaction, and then we fail, and we start to move to the upside. So let's have a quick look and see were there any long opportunities around sort of London session. Yeah, so you kind of just want to be, you see how far price has to come back down to look for these original flips. I mean, yeah, that's not a valid flip for me. So we would have been looking for the reaction to come back in. Yeah, this is it, right? So price is bearish, got that bearish order flow. There's your level of supply, all right? Take the whole range rather than refine the candle. So price comes down, it comes in, it reacts, and then we break up. So then that's your area of demand. And then boom, you've caught the bottom of that move and off you go. Or of course, just follow the mitigations and play the retest to the reaction. And then, yeah, there you go. You're in a beautiful trade pretty much there from the bottom. So yeah, in terms of forecast for the weekend, I've kind of gone over those, expecting this 4 hour high to hold. If we are to remain bearish and have that deeper weekly pullback, we have two nice areas of 15-minute supply here, right? This one that took liquidity, and then kind of that inside bar at the extreme. It's not kind of super clear from a candle perspective, but I would be looking for those. So yeah, see whether we get a change of character, and you can potentially look for those shorts, whether we take the high first and then take the low, and then we go, and then you can play those pullbacks. I wouldn't really be too keen buying from up here, right? I'd rather want to see it move back down below, or at least see if it comes down and generates a bit of liquidity first, then get another change of character, and then yeah, we could be off. So kind of one of those ones. I'm been more than happy to take the shorts and look for the to run that 4 hour low and see if we get a deeper daily pullback into the discount. But I'd also be happy to buy with the anticipation that the daily pullback is over and we are going to run these highs and come all the way up there to form a daily higher high. And then last but not least, we have Aussie dollar, which is just from a higher time perspective. I don't really have anything to add. We've just been chopping around on the daily chart, but we are still heavily bearish. 4 hour chart's kind of just, yeah, it's becoming one of those kind of, it's more of a scalper's environment rather than a swing trader. If you're a swing trader, I'd probably be waiting for price to either come down to this, you know, extreme wick down here and then look to play the long, or be waiting patiently for price to come up into our daily zone. You know, we mitigated this 4 hour zone here, but we never even touched the daily zone. So anywhere within the daily zone, or ideally the 4 hour area supply up here, would be great, because you can see we had this initial change of character there. Let's take magnet mode off. Yeah, and then we had that change of character then again to the downside, looking to see if this 4 hour demand was going to hold. It reacted to supply, right, failed. And then we had another reaction to supply, failed to form a lower low. We got the flip there, we got the change of character, so we switched bullish again, or the internal structure switched bullish again, and that would have been a really nice area on Friday to look for those longs to potentially run this up. So this in theory should be a weak 4 hour high, a weak 4 hour high in theory, right? So we should see that run, and then potentially we can look for some shorts from up here, but probably see if price is going to come up here to then look for that bigger run. So yeah, it's kind of one of those ones, stick to the extremes and kind of just play ping pong. Yeah, in this environment, it looks like the bulls are in control at the moment. I would expect this high to be weak from that 4 hour perspective. So sitting in this inside bar, but don't really want to be buying up that high. At minimum, looking for price to come back down to here, where we have this flip zone here, but it is quite a clean push. So potentially we may come down lower to these flips down here. There was a nice flip entry there actually on Friday. All right, had that reaction, push up and back in. Probably not something I'd personally take, but yeah, it is there. You can see it happening. So yeah, look for longs from down here. You could play a cheeky short to play that short into the long. We have had a change of character from the extreme 15-minute supply, so you could look for some shorts from down here to play this down into these areas before we may potentially then get that run on the weak 4 hour high. But yeah, definitely stick to the extremes in this kind of environment and be a little bit more hot on your management, or just set your alerts on this daily zone and wait to see if price will come to you or the one there on the bottom. So yeah, that wraps it up. Hope you guys have a good week. There will be the Zoom call on Monday. Do let me know if you guys can make it. I know Thomas is away on holiday, so he can't make it. Yeah, so if you guys either want to have a break or you can't make it, just let me know. But I'm happy to hold it. Yeah, if any of you are keen, and yeah, we can have a little chat as always and go through the charts and any questions that you may have. But yeah, with that said, hope you guys have a good weekend, and I will see you in the next one. Cheers, guys.